So as usual, the first commodity we are going to be taking this morning is the US oil. And we are going to be starting from the daily time frame, where we want to be having an holistic view into what is really going on in this market. Now, if we look at what we have here on the daily time frame and taking into consideration what has been happening here in the last 6 to 7 months, you would observe that price action has been on a bearish momentum. And as a result of this, if we connect the series of lower highs here that a couple of weeks ago, we saw the breakout of both the $80 level and the bearish trend line that has been holding bearish momentum for the last 6 months to the upside. However, one interesting thing that happened since the breakout of that $80 level and the bearish trend line is the fact that price action was caught within a consolidation phase, as you can see here, between the $78 level and the $82.50 level, to further emphasize that there is a level of indecision in this market. And one thing about this kind of structure is the fact that there is not much liquidity in the market, as major key players in the market probably have stepped aside, looking out for a major catalyst that will drive the psychology of the markets to bring some liquidity. And now, one thing we should also take note of is the OPEC Plus meeting that will be coming up on the 1st of February. 1st of February, that's on, let's see, what day is that? 1st of February is on, that's on Wednesday. So we shall be looking forward to that. They are going to be making a decision on their production target for the year, and this is definitely going to be bringing some liquidity into the market. And we can see the anticipation for this event already reflecting on the charts in the last couple of weeks now. As you can see, the consolidation phase we have been witnessing here. Remember, prior to this consolidation phase, we initially identified a reversal pattern in the form of a double bottom structure here, where we used the $80 level as the neckline of that reversal pattern, and we were actually expecting a breakout of the $80 level to the upside to give us a beautiful signal of a bullish momentum. But with the way things are going here in the last couple of weeks now, it appears that things might not go like that as expected, as we continue to see selling pressure around the $82.50 level, negating all attempt by the buyers to break out of that structure to incite a wave of bullish momentum. So in this regard now, what we are going to be doing to make a decision for today is to understand what is really going on around here. As you can see, price action is currently trading somewhere around the $80 level, and we want to see how participants in this market has been reacting to the structure since the beginning of this week to decide what our next line of action will be. So in order to have a better perspective into what is really going on around the $80 level, we will be scaling down to a much lower time frame to see things more clearly. And if we scale further down to, let's say, the 4 hours time frame, first of all, it becomes clear that price action has been a choppy situation since the month of November, as price action is caught within a channel where the resistance point falls around the $82.50 level, as you can see here, and then we have the support level of the channel falling around the $73 area. And as you can see, every time price comes into the $82.50 level, we have been seeing selling pressure, negating all attempt by the buyers to break out of that structure. It happened here in the month of November. We saw that happen here again in the month of December. Then we saw since then price has been unable to break out of that structure. We saw some happen last week. It continues to see selling pressure. In fact, on the last day of last week trading session, we saw another selling pressure below the $82.50. So going into the week now, is price going to continue to the downside back into the $73 level where we have a strong demand zone? That is one question we want to be asking ourselves. And if that is going to be happening, remember throughout last week's trading session, sellers were unable to break down the $78 area here, which has been a strong demand zone. And if we are really going to be selling the US oil this week, we need to see a good sign, a good signal to confirm that selling momentum has come to stay here. And this might likely lead to a breakdown of that demand zone at the $78 level, further giving us a confirmation after price action takes out all the buy positions here to incite another wave of bearish momentum to the downside. So to make things clear now, like I said, on the daily time frame, we need to scale down to the 1 hour time frame to see how price action has been reacting to the $80 level, which is serving as a major key level, at least for this week. And when I scale down to the 1 hour time frame, this is the 1 hour time frame here, we can see that the week started with a bullish gap here. As you can see, last week trading session ended at around the $79.50 level here, but when price opened this week, it opened around the $80.50 area. So we had a huge gap of about, a small gap of about $1 gap here. And as soon as price opened at the $80.50 level, we saw that it was a bearish momentum that took this market coming back into the $79 level, after which we started seeing some buy pressure around that area to possibly give us a support level for this week. So right now we have a beautiful channel around the $80.50 level, which at this point will be serving as a resistance point for this week at this point. Then we have the support level sitting around the $79 area to be our support level for this week. Now, whenever we have a channel like this, what we want to be looking out for is a signal to take advantage of any trading opportunity. So at this point, patience is hereby required, as we need to see a breakout or a breakdown of this channel to give us an opportunity to buy. So thinking of buying the US oil right now, breakout of the $80.50 level would likely be a good opportunity to buy at this point. And if price action breaks down the $79 level here, followed by selling pressure below the structure, we might likely be thinking of selling opportunities. Now, looking at what has happened here, and as soon as price tested the $79 level, we have been witnessing buy pressure around this area in the last 4 to 5 hours. And considering the fact that price action is right above a strong demand zone, remember throughout last week, the $78 level has been serving as a buying niche for participants in this market, as every attempt by the sellers to break down the structure has been met with resistance from the buyers. And the same thing appears to be happening here as price action finds a higher low, as price action continues to reject the $79 level, which is simply above that demand zone at this point. And for me, I'm very suspicious that we might likely see a bullish momentum that will lead to the breakout of the $80.50 level in the nearest future. And if that is going to be happening, are we going to wait until the breakout happens before we join the rally to the upside? That will take a long time, and we might likely miss about over 100 pips if that will happen. So what we want to be doing is to position ourselves so that we can catch that move very early. So what I will be doing now is to scale down to a much lower time frame where we want to see what structure price action has evolved into right above the $79 level, to see if the structure will be supporting a bullish momentum. So in that regard, I will be scaling down to, let's say, the 15 minutes time frame, or probably the 5 minutes time frame. And I did that this morning, which I shared on my public platform, and I would like to show you what I was able to identify here. Hold on a second, I saw something. All right, okay, so here we go. So I saw this on the 5 minutes time frame. This was a simple setup I was able to identify on the 5 minutes time frame. And what I noticed was that as soon as price got into the $78.80 level, we begin to see some buy pressure resume around this area. And from a technical standpoint, if we look at this closely following that impulsive bearish move to the downside this week, I want to see this as a reversal pattern, which is more or less like a double bottom structure, probably a head and shoulder pattern. And whenever we identify a reversal pattern like this, the next thing we want to be doing is to identify the neckline of that reversal pattern, which shall be the basis for the trading opportunity going forward. And lucky enough, we have a neckline sitting around the $79 level here, where a breakout retest of that structure will be giving us a beautiful confirmation to join the rally to the upside. And this is exactly what has happened here in the last 1 hour, as we saw the breakout of the $79 level, giving us a beautiful signal, and price action has come back to do a retest of the structure. And in fact, we have been witnessing sharp rejection of the $79 level in the last 10 to 15 minutes now. So I want us to be positioning ourselves somewhere right above the $79.30 area to join this rally to the upside. So for me at this point, I will be looking at a position right above the $79.40 level to buy the uSoil here, and a stop loss sitting somewhere right below the neckline or somewhere below the previous structure, and we continue to ride the move all the way up to the upside. And if a further breakout of the $79.50 level happens here, we'll definitely be thinking of adding more position to our existing trade on the uSoil. So these are my views here for any buying opportunity here on the uSoil for today. So let's be on standby to catch that move when it finally happens. In as much as we are looking forward to buying momentum here on the uSoil, we should also keep our mind open for the possibilities that sellers might likely come in. And in that regard, let us look out for structures which will signal to us that sellers are gradually coming in this market. And based on this current structure here, we would not be looking forward to any selling opportunity unless price action takes out this demand zone here, breaking down that structure to the downside, followed by selling pressure below that structure on our lower time frame will definitely be a good opportunity to join a sell position. So what we are going to be seeing is price breaking down the $78.70 level. This is the lowest point price has been for this week. So we want to see price break down that structure, and if possible, we have selling pressure below this level on our lower time frame. Then we could join that decline to the downside. So let's keep our mind open on this one. Despite the fact that we are looking out for buying opportunities here, we should keep the option of a possible bearish momentum open to as well. So we already have a demand zone at the $78.70 level. A breakdown of that structure will definitely be giving us an opportunity to join a decline at this point. So these are my views here on the uSoil. If you have any questions, feel free to drop your inquiries in the comment section as we get ourselves prepared for the New York session. So that is what we are looking forward to here. So let's be on standby to catch that move when it finally happens. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before we move on to the next pair. So what do we have right here in the comment section? All right, 790, good morning to you. Thank you. Okay, good morning, Susie MB 256, Agaris, and Victor Jedula, Fanusi. All right, that's beautiful. So I want to take this as a confirmation that we're on the same page here. Since there are no questions, we'll be moving on to the next option.